Day after day, the algos excitedly pumped and dumped stock on the back of the coronavirus stimulus headlines of hope and then nope. By the end of the week, stocks were down, bond prices were down, oil was down, the dollar was down, and the economic data was down. On Friday morning, White House economic advisor Larry Kudlow said on Bloomberg TV that the ball's not moving much right now with regard to congressional discussions of more coronavirus relief, and that he doesn't want to make any predictions on timing of any agreement. And investors seem to be on edge over whether a deal would get done and legislation actually passed ahead of the November election. So we wait. And that's exactly what the markets are doing, waiting for their next move. So, what do the charts say? And today we're going to look at two charts, beginning here with the 2-year weekly on the VIX. And the symbol is $VIX using stockcharts.com. As you can see here, the price chart in the middle portion, the bottom was set above 20. Recently, the bottom is being set above 25, and it's just simply going sideways. Same thing here with the MAC. The fast line and the slow line are moving in tandem near that zero line, moving sideways. Up here in the upper portion of the chart, you can see that the RSI is moving sideways. Now, if that doesn't tell you that the market is just marking time, waiting to make a move, I don't know what does. But if there's a move to be made, at least by the VIX, the probabilities, in my humble opinion, are to the upside. And if that's true, then that means that the stock market may head down. So let's go take a look. And now we're looking at the 2-year weekly chart on the spiders, the SPY, and the close on Friday was 345.78. So from that top here, we came on down, reflected off of the 20 EMA, and back on up to this level here, slightly below that previous high. And then we've consolidated just a bit down to here. Now, even though we have a consolidation, and even though we are definitely in the danger zone, the daily chart indicates to me that we might have a little bit of a rally, perhaps next week, maybe the week after, but still with the election coming on up and the lack of any stimulus money, I think we're in dangerous territory. So stay on your toes. Into the volume, that's not telling us much, so we'll move down here into the MAC, and this shows you the weakness in the move off of that reflection. We haven't moved up very fast or very hard. There's hardly any distance between the fast line and the slow line, and even though we're elevated, it's still pretty weak there. So red flag, and you can see that here in the histogram. Definitely much stronger up here, much weaker down here. Moving into the price rate of change, perhaps a larger topping pattern here. Not quite sure, but it does look like maybe some weakness is continuing to drip in that area there. Into the RSI, definitely we have that level here. We didn't get much higher than there, and actually we're heading down. So some weakness, especially with that top there. Moving on down. That trend is downward, and that's not good. Into stochastics, pretty much the same thing. This move off of this level here was pretty weak, so we may continue sideways with some weakness and perhaps just marking some time. Moving down here into Williams, same thing. Not really going to tell us much that we don't already know. Back here to the price chart. In my humble opinion, I think the VIX chart probably tells it best that we're going to mark time by moving sideways. Now, that doesn't necessarily mean it's flat. We could have some volatility, and we'll have to watch that. But I think it's going to be somewhat non-eventful here for a while. Again, we're in the danger zone, so be prepared. And for today, that's ChewDog Charts. Thank you.